So I think it's smattering time. What do you say?
All right. Okay. So I went through and I found us 10 stocks that I think that basically for whatever reason they were ringing bells for me. The way I do this, listeners, just to go back in time for a second, is we produce a large cap, a mid cap, and a small cap ranking every week. And we also do a custom screen. It's best stocks by sector. So I can go right down and I can look at basic materials and consumer goods and energy stocks and financials. And I can go through there and say, okay, of all of these stocks that score really high in the research right now, which of them check mark the boxes that I like, which of them look good. Now, as a refresher, I've said this before, most often I'm story first and technical second. So I use charts to help me with entry points. Sometimes I'll find ideas just by looking at charts, but I like to have a good story and then I like to figure out my entry points from charts. So when you hear me talking about these stocks, oftentimes I'll say, well, these are different things, characteristics that I happen to like about it. And I kind of have like this setup, or if this happens, then maybe I would look at it. So it's kind of a long introduction to the 10 ideas, Joe, but I wanted to just go ahead and say that. So I still got the AMC chart up. Again, listeners, we do post these on YouTube if you want to follow along with the charts. First stock that I wanted to mention was Albemarle. And Albemarle is high scoring in our basics industry. And Joe, the story here is lithium and bromine. And, lithium is used in the manufacturing of batteries, electronic vehicles, Joe. They demand for them is going through the roof. Production of them is going through the roof. And as a result, lithium demand is going through the roof. And then bromine is used in things like flame retardant for, so like if you've got, like cell phone cases and, things where you need to really, make sure that the temperature isn't igniting something. So textiles, that type of thing. And that's more tied to GDP expansion. So if GDP is expanding, then demand for bromine is expanding. And I think that roughly 30% of revenue at Albemarle comes from lithium and roughly 30% comes from bromine. And then the rest is just cobbled together from other businesses. And you can see in the most recent quarter ending March 31st, Joe, Albemarle's sales were up 12% year over year to 829 million. I believe that when I was looking at the earnings release earlier today, lithium sales were up 17% year over year, so growing a little bit faster than that rate. And then I think bromine was growing in the low 20%, something like that. So good strength from both of them, pretty well balanced. Earnings per share in 2021 expected to be $3.64. In 2022, rising 40% to $5.08. Albemarle is, investing in production to boost their production. Prices are pretty strong for these things. So my expectation is that you're going to see revenue accelerate from here and be able to deliver on that earnings. I love the setup, Joe, with the saucer bottom. So, the chart that I'm showing, I've got the technicals enabled through MarketSmith. So this is showing you this nice saucer bottom. And actually, it looks like, Joe, we might be putting in a little bit of a handle. So a cup and handle would be if you have this saucer and then you form kind of a downward. It's got to be facing downward, people. You can't. Some people try to call handles when they're flat, or true handle is down, pointing down. So I would be looking to buy it somewhere hidden here, maybe the 160, low 160s. I might not want to get too cute with it though, Joe, because another thing I like to look at is the volume, as you know, and there's just no volume on down days. The volume on down days is half that on up days, and the up day volume on the last two up days was greater than the average volume over the last, I think it's 90 days is what the average volume is. So first stock today, symbol ALB, Albemarle. Next up, Joe, I don't know if you're sleeping on one of these or not.
I think I am, actually.
Tempur Sealy.
Not the stock itself, that is.
right. But the mattress.
Right.
Symbol there is TPX, so Tom, Peter, X-ray. Again, top line growth, 27% year over year. Bottom line growth expected to grow 42% on the earnings per share in 21 and 14% in 22. And I guess the story, Joe, here would be simply consumer discretionary spending. Wages are higher. people have more money in their banks because they didn't spend a lot of money last year going out to restaurants and things. And people are buying a lot of houses, and no one really wants to move their old gross mattress into their new house. They're going to go out and they're going to buy a new mattress. So, again, you've got to get this range that you're between $35 and $41. It's trading. It's about the middle of it. I'd be looking to buy this anywhere in here, actually. It's at 38 right now. If get another 2 to 3% down day, gets you down to 36 and some change. Yeah, I'd be looking to pick it up there. And then again, Joe, just looking at this volume, no sell day volume. So as it's retreating here, there's really no volume. There's no excitement or need to get out of it. So we already established that Joe's sleeping on a Tempur Sealy. He may be, going to the gym or going out for a run and wearing Under Armour, symbol UA. So UA is another one. And what's interesting to me about UA is, Joe, when was the last, maybe you're going to be the difference here than me, but when was the last time you bought something that was Under Armour?
Last time I bought something that was Under Armour, it's tough to say, but it's probably been a couple of years.
Yeah, me too. They had an inventory glut, so it was considered to be this premier athletic wear, right? And then they had an inventory glut because a whole bunch of sporting goods stores went out of business, and there was a ton of extra inventory kicking around.
Right.
So they had to discount like crazy to move the stuff out. It kind of lost kind of that premium feel. And at the same time, some of these other athletic wear companies, Nike, et cetera, were innovating to play catch up to some of these more breathable fabrics and everything else, right? So there was a lot of short interest in Under Armour, and there still is a lot of short interest today. And it kind of lost, again, there was that inventory glut. That's now kind of been worked through, Joe. The inventory thing, I think that's that's yesterday's story. And I think that, if you look at the year over year growth in the March quarter, 35% revenue growth year over year in the March quarter. And next year, earnings per share is supposed to grow 41% to 48 cents per share. So I just took a quick look here, and you're still 8 days to cover short. So at an average daily trading volume, it would take you 8 days for all the people who are short to cover it. So when this is exactly why I like our scoring system, Joe, because it highlights these ideas that maybe I wouldn't be thinking of otherwise. And you don't want to go out and buy a stock just simply because it has a high short interest. But when all of these other things are coming together and you have a high short interest, the moves can be pretty powerful. Sitting right on the 50-day. Yeah, I would buy it here and just see what happens, and I can control my risk somewhere under $18 if I want to run a stop loss underneath it. Next one up, Celsius. Energy drinks. Joe, the story here is number of doors. Okay, so this was available in, gyms, but now you're able to find it in grocery stores and increasingly in convenience stores. And I think that they said at the end of the first quarter that they're, in like 92,000 stores.
Wow.
140,000. If you include grocers and convenience stores, there's almost 200,000 stores in the United States. So they could still double the number of doors that they're into. And then remember, once you're in the door, if you're selling, you can get allocated more shelf space. So now you can have mango and strawberry and, all your different flavors. So I don't want to say this is exactly like a Monster was, but this is relatively early in, its penetration of the market. Sales were up 78% year over year in the March quarter. Earnings per share expected to more than double in 2022. Just broke out to a new high, Joe. And this setup right here, if you're watching, if you're listening, go back and find us on YouTube, Limelight Alpha. If you're listening on Spotify or Apple, Talking Stocks, Limelight Alpha on YouTube, so you can see these charts. But I love this setup. You had this big breakout yesterday, Joe, on really heavy volume, and then you're pulling back today to the top of that pivot. So this is, if I didn't own this stock already, and I do own it, I'd be buying it today to see what happened from here. Energy stocks, Joe, been scoring high in our research for a while. I noted last weekend in a short that I did for YouTube that The XLE and the OIH, which are the ETFs for energy, had pulled back. We're sitting on their 21-day moving averages, and it was kind of make or break. Well, they made it was make. These things, there's so many energy stocks broke out this week. It's crazy. So a lot of them are hitting new highs, but there are two here that I wanted to highlight. Occidental Petroleum being the first. Again, Joe, look at the last 7-8 trading days here. No appetite to sell shares. The volume is so low. Again, the revenue here is not going to be up year over year, right? Because you're going to see the prices going to take a little time to flow through, and then they're going to have to increase production, and then you'll see the revenue come in. So your revenue and the earnings don't really look good right now, but we are seeing this rotation to mid-business cycle, inflationary type plays, and Occidental Petroleum would benefit if that's going to continue. So that's one of them. The other is a subsea energy service company called TechnipFMC, which was formed by the merger of Technip and FMC a few years back. But they do a lot of subsea like umbilicals and remotely operated vehicles that are operating in these harsh environments, think like underwater, Gulf of Mexico, whatever, looking to extract oil and out of, in these extract oil that way. Offshore energy service had absolutely gotten destroyed. After oil peaked in the last run up and fell, these things got really, really washed out, and now they're starting to see life again. And I think that I wouldn't buy it today because you went from, looks like $9 to, you went up almost 15% in the course of the last two trading days. So I'd maybe let it come in again, get it below $10 again, and then go ahead and grab some shares of that one as well. Health Equity, HQY, Joe, is next up. And this is think of your health savings accounts, that type of thing. So again, basically allows consumers to manage their healthcare costs or out-of-pocket costs through HSAs and that type of thing, flex spending accounts and all that. So, again, you get the saucer forming, you get a nice down day, maybe putting in a handle.
That's a nice looking chart.
Yeah, I mean, this is tons of buy day volume, very few down days, and potentially healthcare reform at some point that could open up demand or increase demand for HQY's offerings. Also in healthcare, Joe, AstraZeneca. AstraZeneca, huge global pharmaceutical company, does pay dividends. So if you're out there listening, this is from our dividend best and worst list, pays a 2.4% forward yield. You had this nice breakout above the 200-day moving average. It's growing 15% year over year in the most recent quarter. Earnings per share expected to go up 26% next year. And you pulled right back to that 21-day moving average. Again, this is the entry point I would take. Take it here, and then you can control your risk from here. Two more stocks, Joe, and then we'll call it quits. Guess. So again, when was the last time, kind of like Under Armour, you bought anything from Guess, right? Well, their sales doubled year over year in the March quarter, and their earnings per share expected to grow 24% next year. And again, pulled back, broke out, pulled back, sitting right on the 21-day moving average. Guess is a name I would pick up here. And you would think they would benefit, Joe, as people are looking to try and get dressed again in something other than sweats and pajamas.
Yeah, I was thinking about that as you started saying it. Like it would be interesting the other manufacturers out there who are public, who are in the kind of formal wear sort of sector, if you will, I guess. Like, I'm going to a wedding this weekend, and it's been God only knows how long since like this place that's hosting the wedding has had a wedding. It's just really, really interesting. It'll be interesting to see their sales volume this year compared to last.
Yeah, the other thing with Guess, Joe, similar to Under Armour, 6 days still to cover short. So, there's still that opportunity for this to have tailwinds because people are are caught flat-footed by the return of sales growth for this company. So Guess, and then the final one, and I kind of mentioned it earlier in the show, Joe, but that's Ulta Beauty. ULTA is the symbol there. And I'm not sure if I said Guess's symbol, GES was the symbol in Guess. So Ulta Beauty, symbol ULTA. And Joe, this is one of those Peter Lynch kind of stories for me anyways. My wife started talking about Ulta and how she was, oh, I got to go to Ulta, I'll be back or whatever. And, she's not alone, because sales were up 65% year over year in the quarter ending April 30th. And this is a very profitable company. It's going to earn 13, well, projection is for fiscal 2023, 1380 per share, up 16%, following a more than doubling of earnings per share in fiscal 2022. And then, Joe, kind of like I've said before, you've got this gap after reported earnings, high volume buying, right? Gapped up to its old high, 350, roughly 351. And now you're retreating, and look how that volume is drying up on those down days. So my guess would be, yeah, take it right around in here in the 325 to 330 range, and then see if you can get it move back up to new highs.